All right, welcome back, guys. Let's get right into the stock market technical analysis. We're going to go ahead and look at the charts now that we have the Fed out of the way and figure out where things are heading here in the future. So, if you guys are finding value in the content, I would appreciate a thumbs up. If you haven't taken the technical analysis course, I think there's a lot of value there to help you learn this as a skill set. It's not free, my time's not free, but at the end of the day, if we find profitable trades using technical analysis, it pays for itself and a lot more. So check that out if you haven't taken it. Link in the description below. Helps support the channel, and I think it adds value to your education as well. So win-win there. Finally, if you're in the private member group, I think you're finding value from that, at least as of today. And if you're not, feel free to join up. I am commenting in there pretty much every day. I was in there today talking to everyone about really what I was looking for, showing the chart setups, and it's all there in the private member group. $5 a month, guys. What do you have to lose? You have $5 to lose. Okay, so link in the description below on that. I think you'll get a lot of value. And again, today's a day that would really you would have seen the value there in the private member group with how the market behaved. So let's get into this chart. We've got triple Qs. Let me explain kind of days like today on Fed days. We were technically set up to come down, and I did talk about that. And in general, I've been building up to that for the last week or so, talking about how I expect us to come down. When I see a chart set up in such a bearish posture, I don't want to just wait always for the exact moment to short it. Sometimes things sell off early, so I don't want to miss the trade. And so that's why I've been talking about these setups for the last week or so. And here it is on triple Qs. We had an uptrend line on. This is the hourly chart. We had this uptrend line right here. Negative divergence. I mean, just in general, it was the setup that we needed. The volatility came out. Here's the Fed. They popped it, and they popped it originally. Then it sold down. Then they rallied it again. Lots of whippiness off that initial move, but we did get kind of the real deal move towards the end of the day with a big red impulsive candle, really dropping. That candle right there is a 2% candle. Big down day, obviously, on that one candle. So that's a sell signal. Okay, you had this upward trend line, and we broke trend with an impulsive candle, and that's a sell signal. So we've got some support right here at about 304-ish. You'll probably get a little bounce there. I suspect they'll gap it down to this level tomorrow morning, and then maybe you get a little bounce off that level. And that's what I'd be looking for. And then probably more downside. All right, that's the way I'd be leaning. Again, why do I lean that way? Well, let's look at the daily chart. We got to go to the larger time frames to get an indication of where the longer term direction might be. On the daily chart, we really made, I got to clean this up. We really made a new high today in price. They were ramping it this morning, and I know that was probably getting people scared and spooked. But honestly, when I saw that ramp, it was just so obvious to me that what institutions and large money is getting put to work the morning before the Fed comes out with a big announcement. Nobody. All right, that's retail traders, that's market makers playing games, running stops. That's stop rating action. That's what it looked like, and that's what it was so far today. So wasn't worried there, but they ramped it up, made a new higher high on the daily above the previous high, and we now have a divergent high on the daily. All right, we've had that yesterday, but today it's even more pronounced. So there's your negative divergence telling me that this rally is likely going to get sold into, and I think we've probably seen the start of that selling. That's a decent reversal candle. The other thing on the daily is bearish engulfing candle as well. Pretty much engulfed the entire body of the previous day's candle. So to me, it looks like a reversal candle, and I think we'll look for more downside. Negative divergence on the daily indicates potentially a new trend down. All right, so that's what we're looking for there. Let's look at the Nasdaq futures. You can see here on the futures, this one was a lot cleaner of a chart, but here's your daily or your hourly chart. Nice clean upward trend line, bearish rising wedge, negative divergence. All right, It's all there. And then, the Fed came out, they popped it. That's a stop raid. You'll see these kind of overshoots where they'll kind of pop to the upside of a bearish pattern only to be faded and sold into, followed by an impulsive breakdown and sell signal. So, yeah, I don't see any real support till we get down to, about this 12,480 or so. This is the continuous contract, so you'll definitely want to make sure you have that. There's probably some support right here too, about 12,522. But in general, we do have that sell signal. And then if I look at the daily chart, again, popped up, made a new high, and it's a divergent high. We have negative divergence. Look at the RSI starting to turn down right here. Okay, negative divergence on the RSI, negative divergence on the PPO. I think we're going lower, guys. SPY. Here's the SPY. Still, they kind of keeping people guessing. This isn't definitive enough price action today to say that this is going to continue to go lower on the SPY. Again, my uptrend line's right here. This is my bear market trend line, and we're still kind of above that right now. So we'll see. Still left unknown. You can see we popped off that, broke down, back above, down. It's a big battle, a big chop zone basically. So not definitive enough there. Let's look at IWM, small caps, back below. So again, just there's your bear market. We broke out. All right, we broke out, back tested, ran up, came back down, and there's your chop zone. This is just the battleground between the bulls and the bears leading up into the Fed. Big breakdown candle here today, but not enough information to say that this chop zone we've resolved one way or the other. I believe we're going to resolve to the downside, but don't have enough information on that today. Gold. So gold, I still think there's probably a pullback. One of the things is, so we caught pretty much most of this rally in gold. And this is gold futures. We have a divergent high right now. So that's a new high, and there's your negative divergence. So, yeah, I think gold's probably going to pull back here. I do not own any gold miners right now. I took my profit on those and just sat on the sidelines. So, as of now, no position there. And honestly, if I had to pick, I'd probably lean short, at least on the gold futures. I don't know about the individual miners, but semiconductors, SOXX, I believe we're going to start selling down. Again, here's your former high on the daily chart. Today popped up, made a slightly new higher high, and that was a divergent high, negative divergence. Okay, so that was rejected. I'm looking for more downside on this one, and coming down to this trend line, and ultimately probably going a lot lower. Nvidia. So Nvidia on the daily has this bearish rising wedge pattern right there. We've got negative divergence. It's been building for a while. Today they were ramping it up, but again, like I said, who's going to be in here buying Nvidia right ahead of the Fed? That's the bag holders basically. That's, people getting, if you're buying Nvidia today, you're likely going to be a bag holder tomorrow. And even today, really, if you're in there buying that ramp that they were doing, I wasn't frustrated. I saw it looked like a ramp, but again, you have a bearish pattern, you have negative divergence, and you're right ahead of the Fed. It just looked pretty obvious as a bull trap. And sure enough, that's a doji candle. That's a reversal candlestick. So we look for more selling tomorrow. I would look for probably a gap down tomorrow on this one. I suspect we're going to gap down and, kind of gap down in this area around 250 or so. And then the selling really should start to pick up and accelerate. Maybe they'll try to buy the dip right out of the gate in the morning, but it's sell the rip, I believe. If you see a gap down, this thing should be sell the rip, which means you'll gap down. The buyers will probably step in initially, and it should get sold into and start to, work its way lower. So that's what that one looks like. Just look for that gap down or more selling tomorrow. No guarantees, obviously, but with this bearish pattern on the daily and the negative divergence, I think we do get it. And I don't see any support till about 207.77. So I would look for, a move down to there at a minimum, and probably a lot more. But that's 20% down just to that one. Healthcare, so LLY, again, just another rejection. We've just been battling with the 200-day, and it's been rejected, really the last 4 days in a row. We've been getting rejected. So, again, I think that's probably enough. We should start to sell down, and that's it on that one. MRK, this one continuing to work its way lower. These aren't going to move a lot because they're just kind of big, steady healthcare stocks. But again, it just continues to work its way lower. And I think we're heading down to 102.50. Maybe a bounce there, maybe not. But ultimate target is about 98 and potentially down to this 95 area. Both of those, 95 is good support. So I do like that probably as my final target. Although I would expect a bounce probably at this 98 in the 200-day simple moving average. Okay, CAT. So CAT was pointed out to the private member group as a objective trade yesterday, I believe, or 2 days ago. But again, we hit resistance right there. And I talked about that being objective to short today, getting rejected and down. So down we go, most likely down to gap fill right here. About 200, 199.60 or so is the next target. And I think we're heading straight down there. So that's what I got on that one. That's another 9% down. Looks good. SMAR. So this one, it's rallying in the post market, but that doesn't really matter. I don't even know if that's accurate. Yeah, not accurate. I see Yahoo Finance has them just pretty much flat. So this one down 2%. On this one, a little more work to be done. We have this bearish rising wedge here. We have a rejection and sell signal. That came with negative divergence on the daily. All right, followed by more selling. Then we rallied up and back test. And that's all this price action was. Basically 5 days leading into the Fed. Basically, we've just been kind of grinding along this trend line, back testing. And now I'm looking for that clear rejection. So maybe a gap down, something impulsive to really trap this action as it starts to roll over. But yeah, I still like it as a short. I'm still short this thing. And looking for that selling to start to show up. Wheat made a new divergent low today, so I did talk about that as a potential. I still think it looks bullish. It can't quite get going, but new low right there on the daily chart. That low is a divergent low, so it's been building bullish divergence, and that bullish divergence remains. So I still like it I still like it long here. Just waiting for it to get going. And then Joe is the other one I like, which, that's kind of in the middle of support and resistance. Support's right there, 49.50. Resistance up here around 54.80 or so. And that's it. We're just stuck in the middle. So probably going to head up to the top. We need to break out of one of these ranges. Bullish, bearish. So that's it on that one. And that's really it. I don't want to go into too much detail. Obviously, tomorrow will be very telling because tomorrow the big institutions have an opportunity to get in there and maybe do some heavy repositioning. So we'll see kind of how they want to play the market. The day of the Fed can always be kind of whippy, and even the move that we saw towards the end of the day, maybe it's a false move. So let's not read too much into it. It does look, the bearish case does look like it has, some legs to stand on after today, but we'll need to see how the rest of the week plays out. So that's all I got, guys. Drop me a thumbs up, and I'll catch you on the next one.